We at Pershing Square shorted very few stocks. And the reason for that is short selling is just inherently treacherous. So if you buy a stock, it's called going long, right? You're buying something. Your worst case scenario is you lose your whole investment. You buy a stock for 100, it goes to zero, you lose $100, right? Per share. You buy one share, you lose 100. You short a stock at 100, what it means is you borrow the security from someone else. The analogy I gave that made it easy for people to understand, it's a bit like you think, silver coins are going to go down in value. And you have a friend who's got a whole pile of these 1880 silver US dollars. And you think they're going to go down in value. You say, hey, can I borrow, 10 of those dollars from you? He's like, sure, but what are you going to pay me to borrow them? I'll pay you, I'll pay you interest on the value of the dollars today. So you borrow the dollars that are worth $100 each today. You pay them interest while you're borrowing them. And then you go sell them in the market for $100. That's what they're worth. And then they go down in price to 50. You go back in, you buy the silver dollars back at $50, and you give them back to your friend. Your friend is fine. You borrowed 10, you gave him the 10 back, and he got interest in the meantime. He's happy. He made money on his coin collection. You, however, made $50 times the 10 coins. You made $500. That's pretty good. The problem with that is, what if you sell them and they go from 100 to 1,000? Now you're going to have to go buy them back. And you got to pay, $10,000 to buy back coins, that you sold for $500. You're going to lose $9,500. And there's no limit